All right, so today we're going to look at Berkshire Hathaway. First video, but essentially what I want to look at is how to value this company. Maybe not from the standpoint of what the dollar is, but whether to look at it, whether it's fairly traded, underpriced or overpriced. So first company today, Berkshire Hathaway. Everybody knows this company. If you don't, it's run by Warren Buffett and his sidekick, Charlie Munger. Beautiful history. Love the two individuals. I'm a huge fan. In full disclosure, I'm a huge fan of Warren Buffett. I'm equally, if not more, of a huge fan of Charlie Munger. All right, the ticker for this is NYSE. You got BRK.A and BRK.B. There's two classes of shares in there. All right, so the way we're going to do this is we're going to look at the publicly traded companies that they currently own. This is a fairly easy exercise. You can CNBC, BNN, Bloomberg, they all kind of do this thing where they pull up the number of shares related to public holdings that Berkshire Hathaway owns. They have to disclose it in their financials. That Berkshire has to disclose it. So all they do is they take the number of shares that they hold at that day, multiply it by the share price, and you get total market cap, and that is the value of their Berkshire's investment in those companies. So that's easy. That's step A. Step B is a bit trickier. We're going to look at privately traded companies. And the way that I've set this up is I'm going to look at their enterprise value. The reason for doing that is because they don't have a publicly traded vehicle for their equity shares. So the way I'm looking at it is, well, total package, what is the total company worth? And then we're going to reduce it by the amount of debt on this. And you're going to see an example of this. And maybe just to precursor that, for example, BNSF Railroad, huge railroad, I'm going to look at Union Pacific and just say that the Union Pacific EV is the BNSF EV. That's probably not the best, but it's maybe of a proxy, and that's up for debate. This is the way that I look at it. You may look at it a different way, and if you look at it a different way, please leave in the comments below. I'd love to see your perspective on these things. So essentially, in that scenario, what I've done is, if I say they're the same, well, the way that UN may capitalize their business in terms of debt to total cap may be a little different than what Warren Buffett is doing. And so the point of the exercise is I'm going to grab the total EV and then reduce it by the actual debt that Berkshire Hathaway holds. And then that will come up to my equity value, which is going to be Berkshire's basically common shares. Their share, which divided by the number of shares outstanding, will be the share price. We're not going to go that far. We're just going to say equity value, what is it? And then we're going to compare it to what the market says. So today is December 31st, December 30th, rather, almost the 31st. It's December 30th, 2021. So it's, if you're still watching this, then Happy New Year's. But yeah, so we're going to grab, today is trading about $300 a share, and that works to about 650 odd. I've got the number below. We'll go through that. It's about 650 billion. All right, first section. You're going to see this is publicly traded companies. It's very easy. Again, CNBC or BNN Bloomberg does this for you. You can update the share price yourself. I've updated it. For the ones in blue, I've left it at September's 2021 share price. No particular reason. But it basically, for the companies that are not on US or a bit harder to get, I've just left it as whatever it was on September 1st. It's not going to be a huge difference anyways. But the exercise here is very simple. Again, you're going to grab the company ticker. You're going to grab the number of shares that Berkshire Hathaway owns, and then you're going to multiply by the share price, and then you're going to get total market cap. So at the bottom of this, you're going to see total public holdings is about 350 billion US dollars. So that's Berkshire Hathaway's investment into those companies. If that's loaded with debt, like the debt is pushed into the company, right? So Procter P&G is going to have their own debt. UPS is going to have their own debt in those vehicles. Berkshire Hathaway is going to take on their own debt related to their other investments. You'll see we're going to take that off below here, but their public holdings are worth about 350 billion USD, which is about half, if slightly over half of what the company is traded at. So I'm not too worried about that. That's so essentially greater than 50% is being publicly traded. Okay, the next section here is going to start with the privately held companies. And as I mentioned, BNSF Railroad. I spent a few years in the railroad industry, so I wouldn't say I'm very familiar with the BNSF, but I can probably get my way around and understand how whether BNSF and UP would be an equivalent fit here. So BNSF, basically what I've done is I've just gone to UP's enterprise value, that's EV, and I've just pulled their enterprise value, which is approximately 191 billion US dollars. And I'm saying it's a bit equivalent. I'll share with you my thoughts on why I think equivalent may be the right metric. It's not quite of a science, it's kind of an art here. In terms of the network, UP does have a stronger like east-west and more southern US trackage. So that, I think there's some benefits there in terms of, less harsh winters. In terms of the middle of the US, so say from Northern California, like Oakland area going across to mid-US, Berkshire Hathaway BNSF rather, has to actually rely on UN's network. So that's actually a UN line. But if you look at the map of BNSF, where it does outplay UP is probably in the northern US. So I'm talking North Dakota. It even stretches into Winnipeg and Vancouver. They got some trackage rights beyond Vancouver. I'm not sure how active that section is, but having the extra port access into Vancouver, having a bit of an overlap in North Dakota obviously is beneficial if you're bullish on, say, oil and gas or that mining area. But they still got a fairly strong presence in the ports along the coast. They've got like Oregon area, like Portland, Oregon area. Washington rather, Seattle, Washington area in terms of the rail access there. They've got Oakland, California, like I mentioned, and then down at Pola and Pole B, which is Port of Los Angeles and Port of Long Beach down there. And then they've obviously got a bunch of access into Texas to get into the Gulf of Mexico. One thing that is a disadvantage again to BNSF is their access into Mexico is mainly through El Paso, which is, if you were to look at the map, it does require, if it's coming from the east side of eastern seaboard of the US, it does require maybe routing a bit more north. Or maybe rather central US and then comes back down on El Paso. UN's got a better one where it goes in from Texas, so you can ride along the coast from there. So there is a bit of benefit on UP's side, but if my memory is correct, I think BNSF and UP were traded pretty closely before Berkshire Hathaway took BNSF off the market there. So I'm just going to assign the same EV there. Anyways, yeah, that was a pretty long story. Not sure if that was helpful, but that's my rationale for doing that. You can feel free to, make your own judgment call on that. Precision cast parts. This is a popular media, the media has shown a spotlight on this. And you'll see that, for these two privately held companies, I'm taking a bit more time because they are quite substantial and they are larger portions of the company. So Precision Cast Parts, they make cast parts. They make parts for the airplanes. And so obviously with COVID, they were impacted quite a bit. I believe they bought it for around 31 billion USD, which was early 2016, I want to say Jan 2016. Then they had to take a write-off in 2020 because of COVID. I believe that was about 10 billion USD. So you could say it's about 21 billion USD is the value. Interestingly enough, in the September Q3 of 2021, Berkshire Hathaway released a financial statement disclosure saying that when they did their impairment testing on PCC, which is Precision Cast Parts Corp, they valued it at around 35.5 billion. So I know Warren Buffett's not a huge fan of the accountants doing these kinds of things, but I'm just going to use that number because I feel like I can get back to the number. And another reason why I think 35.5 may be the right number is because if you look at, say, Boeing, which has, similar misfortunes in terms of the COVID impact. Add on to the fact that they had 737 Max, grounded. You look at the share price from Jan 1 of 2016 to say today, you're going to see that it's up slightly. There obviously it had a good run and then it dropped substantially because of COVID and obviously of Boeing's 737 Max grounding. But if you over that longer time frame, you're going to see it's around, it's up. It's positive gain. So that's why I'm comfortable. This was bought at 31. Now it's at 35.5. I'm comfortable with that figure there. This next one, General RE, Lubrizol, and Pacific Corp. I'm basically just assigning whatever the purchase price that they bought it at that time. General RE, that's an insurance company. Lubrizol, that's a chemicals manufacturing company, and Pacific Corp, I actually forget what that one was, but so I'm just using the purchase price here. You could argue that it's gone up in value. You can argue that it's gone down. Probably likely gone up in value just simply because of inflation, but I'm just going to use that. You guys feel free to adjust your figures to match this, but the ultimate goal here is to err on the side of caution here. Duracell, this is another one where, quite honestly, I'm not as familiar with the battery market. Maybe a bit more familiar with the Panasonic side of things. I think Duracell is probably more consumer-like batteries, in which case, it's more Energizer-like than it is Panasonic-like, which Panasonic obviously benefits a lot more on the EV, electric vehicles. Whereas I haven't seen as much news release from the Duracell Energizer side of things. I'm sure they have some involvement there, but more of a consumer brand thing, I believe. So I've just assigned the Energizer EV, which was about $6 billion USD. And then Altalink here, again, I'm just assigning the purchase price. Altalink is a transmission utility company. I believe it's for electric in Alberta. It's like a high voltage electric transmission company based in Alberta. And then I've got a few other companies that I haven't assigned values for, like Flight Safety International. That's always gone down in value because of COVID, but it's my understanding is it's going to be very light capex, so very low capital spending on this company because it's more of a training company. Sure, they've got some equipment, but you can spread that cost over several years. Berkshire Hathaway Energy, Dairy Queen, Business Wire, Fruit of the Loom, Geico, Clayton Homes. There's a bunch more privately held companies that I have yet to assign values for, and I have yet to do that because quite honestly, it's slightly difficult without knowing too much about it. Again, this is the 20,000 foot view level. If we're happy to take this down to the 10,000 foot view level if there's any interest in that. Okay, so that's the privately held companies there. And then we're going to add on their cash on hand, and you'll see in their Q3 2021 financials, there's 149 billion USD of cash held on hand. So the total value, basically, this is going to be their EV, right? The EV of Berkshire Hathaway is about 776 billion US dollars. This is my calc. And this is without adding in these entities here. Okay, so it's not a precise figure. I'm not going out saying that this is the EV, but this is a relative EV that, okay, I've filled in some spots here. I filled in the big blanks. Let's kind of see where that gets us. And then less notes payable. So this is notes, loans, long-term debt, loans equivalent. They've got about 115 billion USD. I believe a lot of that is related to the Berkshire Hathaway business, or sorry, the BNSF Railway business rather. And they've got some related to the insurance of Geico and their other insurance businesses. So market cap 660.756 billion USD. Okay, so this is basically my calculation of, say, how much the shares are worth. It's about 661. If I look on $300 per share price, which is today on the the NYSE, it's about 667.5 billion US dollars. And so that represents a difference of about 7 billion US dollars. Now, the question that we need to ask ourselves is the list of privately held companies that they have worth more or less than the 7 billion USD? And maybe one caveat is this 7 billion is about 1% of the total market cap of Berkshire Hathaway. So it's not a huge in terms of percentage, it's not huge. But the question that we need to ask is 7 billion, are all these companies worth, the companies that I had not assigned value to, are they worth $7 billion? And that's basically where I'm going to leave it for you guys to kind of ponder and assess yourself. In my view, I believe the companies that they hold are worth more than 7 billion USD. And like for Berkshire Hathaway Energy, I think they actually it's an owner of Altalink above. They've got a lot of power gen in there. Fruit of the Loom, huge consumer product. Geico, huge insurance. I believe they bought that for about 2 billion USD. Business Wire, huge media company. Dairy Queen, again, like that's a restaurant business. I feel like I can assign 7 billion USD to this group of companies, and then they're going to have access with their other holdings, privately held holdings. So at the end of the day, what do I like about this company is that you could argue it's the market is overpaying for it. You could argue that it's under the. I'd say the margin here is quite small if you're going to say if you're saying that the market has given Berkshire a premium on their holdings. I'd say like that. If you're saying that there's a premium, I'd say the premium is very small, like 1%. If there's a discount on the flip side is if the market is giving them a discount because of their conglomerate size and all that, and because they're holding on to so much cash and not doing much with it, then I'd say there's a chance of a greater discount. So to me, I think the company is very attractive, and I'm interested in holding it and increasing my savings with this vehicle. A couple of things I want to talk about, now that we've gone through that. A few things that you may need to be concerned about or give some thought to if you're looking at this company. One is obviously a lot of people have mentioned Warren Buffett's age. He's getting old. He's old school. Doesn't, Charlie Munger's against the blockchain thing. He's against Bitcoin. That's been very popular. And so, people have come out and said, oh, they're just dinosaurs. They can't keep up with times. And my view is, I agree with a lot of their sentiments. Actually, I agree with Charlie Munger's sentiments around Bitcoin and blockchain and all that. I like to see businesses that do generate value. Harder for me to see what the value of, say, blockchain is in terms of them slowing down their growth. They're not as active, or not maybe you could say maybe a risk averse, or you could say risk cautious, or you could say just not able to find good deals. I do think there is some truth to that, and a byproduct of its being its size. So the larger you are, it is harder to move, into those agile. You're not as connected, and from what I hear is it's a lot of them waiting for people to come to them, not necessarily them going out to take somebody over. And so I do agree with that kind of sentiment. Yeah, they're probably not as growth oriented. On the flip side, though, however, I would say, what company has the ability to buy an entity worth 100 billion USD at a flip of a switch? Not many, right? And so if there was not saying that there is this opportunity, but if there was an opportunity to say buy like a CSX, which is an Eastern Seaboard Railroad, or a Norfolk Southern NS Railroad, which again is Eastern Seaboard, to kind of connect the two seaboards together for the US and kind of have a complete east to west picture of the railroad. It's Berkshire Hathaway that could do that, right? They've got the cash that can do that. Sure, you could go through, UN could go through a merger and then have some they're going to have to find a lot of, shareholders that approve of the transaction. Berkshire Hathaway doesn't really have that issue. Although that's unlikely to happen given, SEC's, competition requirements around that. So it's quite difficult. But the example is that the ability to move without weight to add synergies to their existing platforms, their existing investment, I think is quite valuable. And not many companies have that kind of ability. Companies that want to do that are going to have to take on much riskier debt. But I think this company is well capitalized to do that. Another thing that maybe that does bring to concern is, with Warren Buffett's age, is its succession planning. That's probably the third thing that before you kind of invest in this company that you should consider is if there is a premium that's associated with this company, how much of it is related to Warren Buffett and Charlie Munger surviving? And let's not kid ourselves, they're quite old. If you saw Warren Buffett's diet, it's not something that is, it's not Weight Watchers, right? So that is something that you can consider. My perspective again is that I do think that, I get the feeling, and maybe it's probably, Warren's pretty smart about doing this, is he kind of gives off the feeling that he's doing less and less, and his henchmen are doing more and more. Charlie Munger did let it slip that Greg Abel would likely take over, just given the age versus a G. And I'm a huge fan of the succession planning. I think they've done a great job. I think they're going to be well positioned. If a few of those events do unfold where Warren and Charlie happen to pass away at the same time, or lose the ability to grow the business, and I think Greg stepping in, he's probably going to be able to utilize a lot of this in 149. When there's a bunch of people out there that are saying, oh, Warren's getting old, he's not doing this, not doing that. I'd say on the flip side is, if he does pass away, there's huge upside, given that Greg is much younger and Greg Abel may be able to use that 149. If not, that's fine too. I think the business is just growing steady Eddie. That's how I describe it. So that's kind of my view on Berkshire Hathaway. If you guys have any views or any thoughts on the company, if you want to dig down deeper, happy to go through the exercise with you guys and you kind of drill this down further and get a clearer picture of the company. But I think this lands as the first stepping point for a lot of you guys. When you guys kind of go through and look at a company yourself, whether to invest in that company or not, this should be of a similar exercise. Now, Berkshire's, you could argue that it's a bit easier. You could argue it's a bit harder. But I thought this would be a good exercise to go with you guys. Thanks again for tuning in. Hopefully, I love doing these things, so hopefully I'll come out with more videos. If you have any comments, suggestions, other companies you want me to look at, I'd be happy to dig into them. Really enjoy doing these kind of things. Again, this is a 20,000 foot level view. If you guys want to go down to a 10,000 foot level view, happy to do that. The issue with doing a too granular of a look on Berkshire Hathaway is a lot of it is, privately held companies don't need to be disclosed. There aren't many KPIs that you can benchmark against. So there is a limitation associated with that, but there's always ways around that. So I'd be happy to dig into those with you guys. Again, full disclosure, huge fan of Berkshire Hathaway. I think this company is a great holding. If you own it, I continue to recommend holding it. In Canada, you've got the TFSA, the RSP, and you can use your own, cash holdings. In certain situations, I think the Berkshire Hathaway is a great long-term hold, and in which case, if it's a long-term hold, it's a great RSP tool or a great cash holding, because by the time you're ready to utilize those proceeds, say when you're in your 60s, 70s, you're not going to have a day-to-day 9-to-5 job, so you're not going to be pulling in much income. So you could start selling off some of the Berkshire Hathaway shares, and the capital gains that you're going to pay on this are going to be minimal because you're at the lowest tax, or at a lower tax bracket. If that is an issue, then obviously there is the TFSA. But again, consult with your own advisors, your financial advisors, your accountants. If you guys have any questions associated with that, you can leave it in the comments. I'd be happy to just talk over it with you. Again, not give formal advice, but kind of just bounce some ideas around with you guys. thanks again for tuning in. Hope you guys have a great day. Again, today is December 30th, 2021 for me. So you guys have a great New Year's and look forward to a great 2022. Thanks. Bye.